We begin on the 1-hour chart, because this is where the current behavior first became visible as a process rather than an event. Following the earlier decline, volatility did not immediately expand again. Instead, during the recent Asia session, long-term Bollinger Bands compressed noticeably. Upper and lower bands moved inward together, and price stopped traveling far from the mean. This kind of compression is often misread as rest, but structurally it represents something different. When long-term Bollinger Bands compress while distance to higher timeframe references remains unresolved, the market is not pausing. It is reallocating pressure. That reallocation became clearer as the U.S. session began. The U.S. session anchor formed below the prior Asia session range, rather than attempting to reclaim it. Price accepted operating beneath that range without volatility expansion. This matters because acceptance after compression is not reactive. It is deliberate. From there, price continued lower and moved through an older Asia session reference that had previously acted as a stabilizing boundary. This was not a sharp break. There was no acceleration, just continued acceptance of lower structure. As the next Asia session formed, price did so below that older reference, confirming that the market was no longer negotiating it from above. What followed looked, briefly, like recovery. Price lifted, pushed above the most recent Asia session high, and approached the short-term mean. But that movement stalled quickly. The 20-period moving average capped price. Instead of acting as support, it functioned as resistance, and price rotated back lower. This interaction is critical. It tells us structure did not rebuild. Looking at the moving averages together, the condition remains consistent. Price is below both the 20 and the 120. The 120-period moving average continues to descend sharply toward the 20, tightening alignment rather than breaking it. This is not acceleration. It is alignment through time. Bollinger Bands confirm the same story. Both short-term and long-term bands are closing simultaneously. Upper and lower bands are moving inward, even as price accepts lower placement. That combination tells us volatility is contracting while structure continues to shift. RSI reflects this as well. Momentum dipped during the decline, stabilized, and has remained muted. It has not rebuilt into strength, even during brief rebounds. So the 1-hour chart is not describing a reversal or a breakdown. It is describing compression choosing a lower location through repeated acceptance. Dropping down to the 15-minute chart does not introduce a new narrative. It exposes how the 1-hour condition is being processed in smaller, repeated steps. Here, price behavior is defined by attempt and stall, rather than impulse. After structure accepted lower placement on the 1-hour chart, price made several recovery attempts on the 15-minute time frame. Each of these attempts followed a similar rhythm. Price lifted toward the short-term mean, slowed as it approached, and stalled before meaningful acceptance could form. The 20-period moving average consistently capped these moves, confirming its role as resistance rather than support. What matters is not the size of any single candle, but the repetition of this failure. Bollinger Bands on the 15-minute chart illustrate this clearly. Short-term bands narrowed first, showing reduced urgency. Long-term bands followed, compressing gradually rather than snapping shut. Volatility did not disappear. It stepped back. As volatility contracted, price continued to rotate within a tightening range. Each rotation consumed time without repairing structure. RSI on this time frame stabilized near the mid-range. Momentum neither collapsed nor rebuilt. This tells us participation remains, but conviction does not. Every small recovery attempt reduced available space. Room to rebound narrowed. Room to rotate tightened. This is how structure relocates quietly on lower time frames, not through acceleration, but through repeated, unresolved interaction. The 15-minute chart is not contradicting the 1-hour chart. It is expressing the same condition with finer resolution. This brings us to the core condition of the current structure. What matters now is not speed and not outcome, but how time is being used while distance remains unresolved. Earlier in the move, price traveled quickly. Distance to higher time frame references expanded faster than structure could negotiate. That phase ended. What followed was not reversal, and not continuation, but compression. Volatility stepped back before structure was repaired. That order is critical. When volatility contracts before distance is resolved, markets rarely respond with acceleration. They respond with duration. We can see this clearly across multiple inputs. Price remains below both the 20-period and the 120-period moving averages. The 120 continues to descend toward the 20, tightening alignment rather than breaking it. This is not a crossover event. It is a convergence process. That process takes time. Bollinger Bands across time frames reinforce the same message. Upper and lower bands are closing together, but they are not flat. There is still slope. There is still directional pressure. Volatility has slowed, but it has not reset. RSI supports this interpretation. Momentum recovered from the earlier decline and stabilized, but it failed to rebuild into strength. Momentum is present, but it is passive. Structure is active. In this environment, markets do not resolve through a single decisive move. They rotate, they test, they pause, and they repeat. Each session participates, but none commits. This is how deferred repair unfolds. The earlier decline skipped the slow negotiation phase that typically happens near major references. That negotiation did not disappear. It was postponed. Now it is happening through time rather than movement. Each session does not need to push price significantly lower. It only needs to accept being slightly weaker or failing slightly earlier than the session before. That is enough. Over time, those small acceptances accumulate. Structure shifts without volatility. Distance is processed without speed, until volatility meaningfully expands again, or until price reclaims the short-term mean with sustained acceptance. The same structural references remain in control. Nothing has concluded. Nothing has resolved. The market is still working, quietly, through time.